Guys, this is Rudy coming at you from West Palm Beach in Florida. It is Saturday. It is July the 31st. It is the end of July. Who would have thunk that more than half the year is already gone? Anyway, we are knee deep into earnings season. I'm not sure whether you guys missed me because I've been away a bit on business, doing all kinds of stuff, but I have been paying attention not only to the energy market, which is about a $1.5 trillion sector, but also to the energy companies as they have been reporting. So what I thought I would do is take a quick look at a few of the companies that have already reported, and then we can look ahead at some of the companies that will be reporting this coming week. That would be the first week of August. So we're going to kick off earnings season for some of these energy companies starting on August the 2nd, which will be Monday. So let's take a quick look at some of the things that happened last week, just very briefly. So Chevron and Exxon had reported profits for the second straight quarter as improving demand for petroleum products and a jump in the oil and gas prices boosted operations. Chevron also reinstated its share buyback program. It earned $1.71 per share. The estimate was $1.59. With revenue of 37.6 billion, the estimate was 35.94 via Refinitiv. So a very, very comfortable and very easy beat, which kind of sets the stage for the other energy companies in terms of what we might be expecting next week. But before we jump into next week, we're going to look at a couple of more things here. Our free cash flow was the highest in 2 years. This bodes well for almost all energy companies. We will resume share buybacks in the third quarter at an expected rate of $2 to $3 billion per year. Of course, we know that share buybacks, there are sort of pros and cons attached to share buybacks. On one hand, people say if you are buying back your own stock, do you not have anything better to do with the money? And on the other hand, of course, shareholders would be delighted because it's anti-dilutive and should result in a boost in the stock price. I remember being, as an ex-insider of a publicly traded company, we always used to have this debate internally, or we often had this debate internally where people said, really, the fact that you're buying back your own stock means that you are absolutely devoid of other ideas as to how to grow your business. So the only way that you can actually achieve success here is to buy back your own stock because your stock is cheap. So kind of two different schools of thought in that regard. I'm not averse to stock buybacks. We obviously all have benefited from that in the past. Exxon also easily beat top and bottom line estimates. The Exxon earnings of $1.10 beat the estimates of 99 cents quite easily, and the revenue was 67.74 billion, beating the estimate by a little because the estimate was 66.81. Increased demand, it's a common theme, right? Chairman and CEO Darren Woods didn't say anything about the increased prices, but he certainly highlighted the increased demand. I think that's a common theme or thread throughout the energy business or sector as we know it today. He added improved cost structures, solid operating performance, low cost of supply investments, etc., all leading to Exxon's better results. Another oil super major, Royal Dutch Shell, reported on July 29th, so that would have been Thursday, stronger than expected Q2. I picked this one particularly because it was so good. I also have the super major Total Energy from France in my portfolio. They had a strong quarter too, but not as good as Royal Dutch Shell. Shell reported earnings of 5.5 billion, easily beating the estimate of 5.1 for the quarter, and that compared with $738 million over the same period a year earlier, and 3.2 billion for the first quarter of 2021. So a very, very significant improvement. Shell boosted its dividend for the second consecutive quarter, and it launched a $2 billion share buyback program. Its dividend rose to 24 cents. And why is that significant? Well, it is up a little, but it comes a year after the company had moved to cut its dividend to shareholders for the first time since World War II. And if you are not old enough or you don't remember when that ended, that was like around 1945. So it's been a long, long time, almost 80 years since Shell at last cut dividends to its shareholders. Sort of a quick look at the macro here. Brent futures rose for the quarter. The average was $69 a barrel. Obviously, WTI is not far behind that, which is up significantly from the average of $61 per barrel for the first quarter of 2021. Last week, oil was closed, Brent was closing at 75.38 on the future contracts. The oil prices, of course, have rebounded. I think we all know that by now. And all three of the world's main forecasting agencies, OPEC, the International Energy Agency, and the US Energy Information Administration, all expect a demand-led recovery to pick up speed in the second half of 2021. The oil and gas industry was sent in a tailspin in 2020. We all know that. As a result of COVID-19, the demand shock, plunging commodity prices, unprecedented write-downs, and tens of thousands of job cuts. Let's look ahead. So on Monday, we see Pioneer Natural Resources. We have an earnings whisper year of approximately $2.81. The consensus is $2.62 with revenue of about $2 billion. But look at this year, the expected quarterly earnings growth is almost 1,000%, and the expected annual earnings for 2021, 683. Let's look at a few more before we wrap this one up. ConocoPhillips, earnings whisper $1.24. The consensus is $1.15. So it looks as if they're easily going to beat the estimates there as well on revenue of about $9.6 billion. Quarterly earnings up significantly, 225%. And the expected annual earnings for ConocoPhillips for 2021 is expected to be up by almost 600%. How about Energy Transfer? Look at this one. So the earnings whisper is 39 cents. The estimate or consensus is 24 cents. Revenue just over 15 billion, 15 and a half almost. But look at this one. The expected annual earnings for Energy Transfer for 2021. And sorry about this because there's actually a 1 tucked away under the left-hand border of the circle over here. This is 1,088% expected annual earnings for 2021 for Energy Transfer. Boy, Energy Transfer has been good to us, and maybe it's going to be better still. They're reporting on Tuesday, August the 3rd. Another one reporting on August the 3rd on Tuesday is Occidental Petroleum. So the earnings whisper right now, well, it says not available. The consensus is 0. So I'm going to kind of stick my neck out here and say I actually expect Occidental to deliver a positive surprise there, maybe a penny or two. Revenue, the consensus is 5.56 billion. Again, I'll take a flyer on that one and say we're going to get closer to 6 billion. I know Dr. Yedi Zhang had predicted 6.1 billion. I'm comfortable with 6. So let's see how we land on that one. Not too bad here. The expected quarterly earnings up by 100%. Expected, obviously, and the annual earnings would be expected up about 802%. It's quite significant. How about Phillips 66? Earnings whisper also not available or not applicable right now. The consensus is 71 cents. Revenue of 22.5 billion. Nice expected future growth. Expected quarterly earnings almost 200%. Expected annual earnings 335. That's a good performance. Marathon is reporting on Wednesday. That's August the 4th. The earnings whisper is 25 cents. The consensus is 18 cents. And revenue is expected at about $1 billion. Also good numbers in terms of the expected quarterly earnings and annual expected earnings for Marathon. I'm going to wrap it up here with Petroleum Brasileiro. They were expected to report on Friday, and I think they are now expected to report on Wednesday, which is August the 4th. The consensus there, 92 cents, and revenue of about $18 billion. Big numbers in the mid 300 percentile for expected quarterly earnings and expected earnings for PBR. So if you're invested in PBR, it looks pretty good for you too. So guys, it's sort of a handful of stocks that you may or may not be invested in. Obviously by now you know that I'm long a couple of these. In addition to some of them that I mentioned, like Total and Occidental and Energy Transfer, I also have a couple of Canadian stocks. Enbridge reported on, I think it was Friday morning, they beat on both the top and bottom line. So Enbridge is still remains as it still remains as one of my foundational stocks, one of my better stocks. Pembina is a pipeline operator out of Canada. They were bidding to buy Inter Pipeline, and that deal fell through, which caused a spike for Pembina. So their stock was actually trading a little higher as well. So overall, I appreciate that the energy sector and some of the stocks we own have been extraordinarily volatile and obviously under enormous downward pressure. I'm not particularly interested in the stock price in the short term. Much like you guys, I probably watch it every single day, and I can't help myself. But try to focus on the macro and where it's going to go in the future, as opposed to looking near term every single day when you see, especially stocks like Oxy, if you still want to call me Mr. Oxy, going up and down and mostly down, down, down. Don't get too stressed about that kind of stuff. Long term, you're going to be okay. Energy is going to rebound. It's in the early stages of a massive rebound, and I think it's going to be good for us all. So on that happy note, this is Rudy for Investor Investor signing off, saying thanks for watching. If you like my videos, please subscribe, and I'll see you guys soon. Bye-bye.